I had an interesting conversation with a fellow who I trust a lot, who, while there, we talked about, he wanted to talk to me about my idea or how I've been talking about lately that the markets are being challenged by the central banks to stand for delivery, and that this is the Achilles heel to the Western bullion banks. And he wanted me, and he pointed me in the direction of a story about a group on the Shanghai Gold Exchange called Zhongkai Futures. I don't know if you're familiar with them. It's ZHONGCAI. It's a company, a futures company. And over the last month or so, we've been seeing large deliveries of gold out of New York that are going to China and related to the Shanghai premium. And there's been, once the metal gets sent over there, we've seen a very, very large drawdown in the numbers on Shanghai. In other words, it's someone's taking it off of the exchange. And what's interesting is I have said for a while, and it was a long conversation I had with this gentleman, and I thank him for it, for pointing me in this direction, because it's very compelling as to what I was talking about. He was saying, look, this entity is for real, and they are standing up against JP Morgan. And I did some digging into it and found that as of last week, while we were at the show, Zhonghai Futures had over 31,000 long positions across all sorts of gold contracts with a margin of 21 billion yuan, or 31 tons of gold. And they also have massively long positions in silver futures contracts. And they're standing for delivery. And the counterpart to all this, the short position, is JP Morgan. They're getting crushed.
Have you heard about China's bold move against JP Morgan? Andy Schectman reveals startling data. Zhongkai Futures, with over 31,000 long positions in gold contracts valued at 21 billion yen, is dramatically shaking up the precious metals market. With 31 tons of gold and massive silver futures, they're standing for delivery, leaving JP Morgan struggling to keep up. This isn't just speculation, it's a market shift that could change everything. Schectman emphasizes that this maneuver is potentially a proxy for the People's Bank of China, making it even more significant and far-reaching. As gold and silver flow out of the COMEX and into China, the usual market dynamics are turned upside down. The high-stakes battle between Zhongkai Futures and JP Morgan could have profound implications for global finance, revealing how the biggest money in the world is strategically positioning itself, while average investors are distracted by shiny objects like Nvidia and Bitcoin. Schectman underscores that this is a critical moment in the precious metals market, and understanding it could be crucial for investors.
And so what happens normally is that the bullion banks will suck in the speculation. They'll absorb all the buying pressure from the hedge funds, the big funds, and they'll absorb all that pressure because they're borrowing money from the Fed at next to nothing, whereas the hedge funds are borrowing it at a much higher level. They have much more money, they get it at a much cheaper rate, and they know where the pain points are. So they suck in the speculation. Then they step on the position. After they absorb all the selling or the buying, then they step on the position and step on the position until the managed money capitulates. And it's a rinse, wash, and repeat thing that's been going on forever. I always wondered, why do they keep coming in and doing this? But what's interesting right now is that Zhonghai Futures is standing for delivery. And I believe that this is a proxy for the PBOC. Who holds a margin account of 21 billion yuan, or 31 tons of gold, and massive amounts in silver futures, and standing for delivery? We keep seeing large amounts of gold leaving the COMEX and going to China through a contract that was developed in 2015 by the CME group that allows for delivery to Brinks, Hong Kong, which is a COMEX facility. It is then trucked to the Shanghai exchange, as all metal has to go through there, and it's disappearing off the exchange. Is it the PBOC doing it? Don't know. But what I am simply trying to say to you is that because gold is so important right now, and he opened my eyes to Shanghai futures and saying this is the PBOC by proxy, and I believe it, because I think it's become very evident where gold fits into the equation. And here again, with positive real return in the treasury market, a strong dollar, outflows out of the ETFs, and very weak demand here in the United States, well, logic would tell us, geez, the price of gold ought to be cratering. But here we are at all-time highs today. And if you look at how gold has performed in most of the currencies around the world, even including the Canadian dollar, I mean, in most currencies, it's pretty damn close to doubled or more over the last 2 years or 3 years. And so there is an amazing amount of demand for gold at a level above all of us. And that's what people need to understand. I've been trying to hammer home. Do not listen to the rhetoric. Do not look at the price. It is the ultimate tool of misdirection. When you see someone standing up against JP Morgan with a margin account that has control of 31 tons of gold, and they've been standing for delivery, what more do you need to know? When you see India buy 1.5 times the amount of gold they bought all of last year and bring it home, along with 100 metric tons that they've held since 1991 at the Bank of England, what the hell more do you need to know? The biggest money in the world is front running what is coming. And if you do some digging, and last week we talked about the unit and how all this will trade over Project Enbridge, you can see that we are moving to a system that will look at gold in a very, 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 very different way. And silver too. But I mean, what did I learn? I learned that there weren't a lot of people there. I learned that the investing public is asleep at the switch while the biggest money in the world, and no surprise to me, this is how it always goes, the biggest money in the world positions themselves while the rest of the people are fixated on the shiny objects called Nvidia, Bitcoin, and Apple. And yet gold keeps marching higher, outperforming everything, and without any fanfare. At a period of time where everything in this country, from positive real yields, strong dollar, and outflows out of the ETFs, and very tepid retail demand, would say it should be tanking. Silver's being drained all over the place as well. On the first day of deliveries here for the July delivery, or the August delivery contract, almost 6 million ounces of silver were delivered to some company called PTG that no one knows who they are. And this goes along with the continued outflow out of COMEX, SLV, the ETFs, other ETFs, and Shanghai. The weekly report out of Shanghai Gold was released the other day and showed 215,355 kilograms of silver leaving the Shanghai Metal Exchange. That's 7.6 million ounces, or the weight of 60 adult African elephants. So when you see gold and silver being accumulated and then taken off the exchanges, that means delivered somewhere. It ain't coming back the way that it is. What more do people need to know? And I can keep saying all of this stuff, but some people get it. Some people are waiting for something, I'm not quite sure what, to understand that when this changes, it'll be a violent change. It starts out the little by little by little, because that allows, these people, these countries, these banks, these sovereign wealth funds to reposition slowly without raising too much in the way of an alarm. As you can see, gold at all-time highs, and virtually no one is talking about it. But when it switches, when there's no bid to be found on the Western exchanges, bang. We saw that Adam Glapinski, who is one of the guys at the Bank of Poland who's said some very interesting things over the years about what gold represents, said that he's the Central Bank of Poland, and they've ranked second globally for all purchases last year. He said purchases will continue significantly, and we've seen Turkey buy 6 tons in May, India buy 4 tons, the Czech Republic 3 tons. Every one of them brought it home. And now you have we talk about the reclassification of gold from its current status as tier 1. And now there's a lot of talk about groups trying to even petition it to be a HQLA, or a high quality liquid asset. which would be just above the tier 1 status. It is exactly the same thing as cash. And they are petitioning right now I guess it would be the BIS or the London Metals Exchange. But all I know is that there are articles floating around that gold is being elevated to the highest level and accumulated and repatriated. And that's what I talked about at the show. That's, I think, the most important clue as to where things are going right now.